Welcome to Market Brief After Hours. If you were watching the tickers today, you know we just witnessed one of the most dramatic trading sessions in recent memory. We had extreme overnight highs, geopolitical shockwaves, and a late session turnaround that gave everyone a serious case of whiplash.
It was an absolute roller coaster. The day started with intense pressure. We had crude oil surging above $119 a barrel overnight because of fears of a prolonged energy supply disruption in the Persian Gulf. But then the narrative flipped completely. Comments from President Donald Trump suggested the conflict with Iran might be nearing its conclusion. That single geopolitical pivot pulled oil prices back down from the stratosphere and completely revived risk appetite across the equities market.
Let's get right into those U.S. market numbers, because the recovery was staggering. The Dow Jones Industrial Average was staring into the abyss earlier in the day.
Exactly. The Dow was looking at an intraday slide approaching 900 points. But as oil prices retreated, buyers rushed back in. The Dow staged a massive comeback, rising 0.50% to close at 47,741. Just think about that swing, from being down nearly 900 points to closing in the green.
And the S&P 500 followed a similar trajectory, right?
It did. The S&P 500 had fallen as much as 1.5% during the worst of the morning panic. But as fears of this prolonged, energy-driven inflation started to ease, the index climbed 0.83% to finish the day at 6,796. But the real star of the late session rally was the Nasdaq.
The tech sector really put the market on its back today.
Without a doubt. The Nasdaq Composite advanced 1.38%, closing at 22,696. It completely outperformed the broader market, and we have semiconductor stocks to thank for that. The index had been down more than 1.5% earlier, but then the chip makers went on a tear. Broadcom jumped more than 4%. Micron Technology and advanced micro devices both gained around 5%, and Nvidia climbed over 2%. Once the fear of skyrocketing energy costs subsided, investors piled right back into tech.
While the U.S. managed to shake off the early panic, the global markets weren't quite as lucky. Asia took the brunt of the initial oil shock.
Asia caught the absolute worst of the overnight panic. When crude was surging toward $120 a barrel, fears of supply disruptions in the Persian Gulf triggered a massive regional sell-off. South Korea's Kospi was hit incredibly hard. It plunged over 8% during the session, which actually triggered a circuit breaker, halting trading for 20 minutes. It eventually closed down 5.96%.
That is a brutal day for South Korea. Did their tech giants drag the index down?
Yes, heavily. Samsung Electronics fell 7.81%, and SK Hynix dropped 9.52%. The fear was that higher energy costs would severely impact the semiconductor industry. Over in Japan, the Nikkei 225 dropped 5.2%, and the Topix declined 3.8%. Major chip-related stocks there, like Advantest and Lasertech, suffered steep losses too.
What about China and the rest of the region?
Chinese markets were slightly more resilient, but still in the red. The Hang Seng fell 1.33%, and the CSI 300 declined 0.97%. They also had some mixed economic data to digest. Consumer inflation rose 1.3% year-on-year in February, the highest in 3 years, but producer prices contracted by 0.9%. Down in Oceania, Australia's ASX 200 dropped 2.85%, and New Zealand's NZX 50 slid 3.1%.
And by the time the European markets opened, the mood was still incredibly cautious.
Very cautious. European equities closed broadly lower. The Pan-European Stoxx 600 fell about 0.7%, with pretty much every sector declining except for oil and gas. Looking at the specific countries, Germany's DAX dropped 0.85% to 23,390, and France's CAC 40 fell 1.07% to 7908. Italy's FTSE MIB slipped 0.3% to 44,025, and Switzerland's SMI closed down 0.73% at 13,000. In the UK, the FTSE 100 fell 0.2% to a 5-week low, though it did manage to pair an earlier drop of more than 1.5%.
Germany also had some rough economic data today, which couldn't have helped the sentiment.
It really added to the gloom. German industrial orders plunged 11.1% in January. The expectation was only a 4.5% decline, so that was a huge miss. Plus, industrial production unexpectedly fell 0.5% when forecasts were actually calling for a 1.0% increase. Add in the fact that European bond yields moved higher, with the UK 10-year gilt yield rising 3 basis points to 4.664% and the 2-year jumping 13 basis points to 4%, and you can see why Europe struggled to find its footing.
It all comes back to the energy markets today. The volatility in oil was just extraordinary.
Extraordinary is the right word. We saw West Texas Intermediate crude surge above $119 per barrel overnight, the first time we've seen those levels since 2022. This happened after Middle Eastern producers cut output following the closure of the Strait of Hormuz. Brent crude also briefly surpassed 119. But then came the reversal.
Right, as the geopolitical rhetoric cooled down.
Exactly. Once President Trump's comments hit the wires suggesting the conflict could soon end, prices pulled back sharply. WTI fell to around $85.27 during later trading, before ultimately settling 4.26% higher at $94.77. Brent pulled back to $88.43 before closing 6.76% higher at $98.96.
And we're also hearing rumblings about the G7 stepping in?
Yes, investors are closely watching the Group of 7 nations. Energy ministers are scheduled to meet to discuss a potential coordinated release of strategic oil reserves. That possibility alone helped calm the markets and actually pushed U.S. Treasury yields lower after an initial spike. The 10-year Treasury yield declined more than 2 basis points to 4.109%, and the 30-year fell more than 3 basis points to 4.721%.
We are going to take a quick break, but when we come back, we'll dive into the foreign exchange markets, look at the technicals, and break down today's biggest individual market movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the massive swings in equities and oil. Now, let's look at the currency and commodities markets. The FX boards were flashing all sorts of signals today. Let's start with the euro.
The euro is under some serious bearish pressure. Euro USD closed at 1.1616, slipping 0.03%. It traded in a fairly wide range today, between 1.1698 and 1.1507. But the real story is in the moving averages.
The technicals are breaking down?
They are. The pair broke below a cluster of key moving averages. Price is now sitting beneath the 50-day simple moving average at 1.1762, the 100-day at 1.1695, and the 200-day at 1.1670. Those averages are actually beginning to converge and tilt lower. Breaking below the prior support around 1.1650 tells us that sellers are firmly in control right now. We're looking at immediate resistance near 1.1650 and downside support at the session low of 1.1507.
What about the British pound? Did it fare any better?
A little bit. GBP USD managed to rebound, settling at 1.3434, which is a gain of 0.18%. Buyers stepped in near support and pushed the pair back above the 100-day moving average, which sits at 1.3398. However, the broader structure is still pretty mixed. It's trading below the 50-day SMA at 1.3531 and just underneath the 200-day SMA at 1.3444. So short-term momentum is improving, but it has some significant resistance overhead.
Meanwhile, the Australian dollar seems to be ignoring the chaos entirely.
The Aussie is looking incredibly strong. AUD USD closed at 0.7071, advancing 0.64%. It produced a very strong bullish candle, finishing right near its session high of 0.078. The bullish trend here is firmly intact. It is trading comfortably above all its key moving averages, the 50-day at 0.6922, the 100-day at 0.6740, and the 200-day at 0.6637. All three of those are sloping upward.
Let's pivot to precious metals. Gold has been making headlines with record levels. How did it hold up amid all today's volatility?
Gold pulled back, but the underlying strength is still there. It closed at $5,138, down 0.66%. It dropped as low as $5,015 early on, but buyers aggressively stepped in to defend that $5,000 psychological support zone. The broader trend remains heavily bullish. The metal is trading way above its 50-day SMA at $4,870, the 100-day at $4,515, and the 200-day at $3,994. This looks more like consolidation than a trend reversal.
Silver had quite a bounce as well.
Silver rebounded very strongly. It finished the session at $86.33, rising 2.20%. It dipped down to $79.66, but formed a strong bullish candle with a long lower wick, signaling aggressive buying.
Silver has now reclaimed its 50-day SMA at $85.51, and it's well above the 100-day at $69.96 and the 200-day at $54.60. Just like gold, the longer-term uptrend is incredibly powerful right now.
Before we wrap up, let's look at the individual market movers. Even with the macro chaos, we had some massive single stock stories today. Hims and Hers Health had an explosive session.
Explosive is an understatement. Shares of Hims and Hers surged 39% today. This massive jump came after reports that they reached a deal with Novo Nordisk to sell the pharmaceutical firm's weight loss drug on their platform. Weight loss drugs are obviously a huge market narrative right now, and Novo Nordisk shares also moved about 3% higher on the news.
And in the biotech and pharma space, it was a tale of two completely different outcomes for Olema Pharmaceuticals and Xenon Pharmaceuticals.
A perfect example of rewards in biotech. Olema Pharmaceuticals slid 25% today. Roche announced that its Phase 3 trial for an oral breast cancer drug failed to meet its primary objective, which dragged Olema down heavily. On the flip side, Xenon Pharmaceuticals surged more than 49%. They announced that their seizure treatment drug, azetukalner, met key efficacy targets in clinical testing.
Finally, United Therapeutics rewarded its shareholders today.
They certainly did. Shares climbed more than 10% after the company authorized a massive $2 billion share repurchase program. Buybacks of that size signal a lot of confidence from management, and the market clearly loved the move.
It really has been a remarkable turnaround after a turbulent start to the week. We saw a sharp reversal in oil, signs of cooling geopolitical tensions, and a massive recovery in U.S. equities, led by the semiconductor space.
Exactly. But investors need to stay sharp. Volatility remains elevated. Everyone will be keeping a close eye on the Persian Gulf, waiting to see what the G7 does regarding strategic oil reserves, and watching how these energy swings impact global inflation. The dust has settled for today, but the landscape is still shifting.
That is all the time we have for today's breakdown. If you find this useful, please follow Market Brief After Hours. We will be back tomorrow to make sense of whatever the markets throw at us next.